Welcome to Trading Lounge and the S&P 500 for the 27th of May. And starting with the S&P 500 here, of course, but this is a yearly chart, and the stock exchange started, I think it was in 1792. So this is somewhere in that vicinity here. So it does give us a nice long look at the S&P 500. And also too, I know that a lot of Elliottians believe that this is the fifth wave here of the fifth wave to finish things off here. But realistically, it looks like more like a third wave coming into play here, doesn't it? It's because it's long and it's strong and all the rest of it. And if we change that to a log scale, so putting it into a log scale here, we can see that it balances out a little bit more. And also too, we can still see that nice third wave here, and this pullback that we've had from the COVID-19, it pulls back quite nicely as a 30-40%, 38.2% retracement level. I haven't checked that, but I can just visually see that that's kind of correct there. So yeah, I just thought that was sort of interesting. Alrighty, we are looking at the monthly chart here. And we're looking at wave 3, 4 here, and then 1, 2, 3 expanded flat for wave 4 here, and we're looking for wave 5 to the upside here. An expanded flat should be just a simple A, B, and C here, taking out the high of the third wave here, and also taking out the low of wave A here, and then producing 5 waves to the upside. So within those 5 waves to the upside that we're looking at it like this here from wave 4 here, we're looking at wave 1 here, we're looking for a pullback for wave 2, and then up for wave 3 there. Let's move to the daily chart here. So as you know, from the low here, we've been counting up as 1 and 2 and 3 and 4 and looking for wave 5 here for this. So we'll be looking at that today. We're at 3,000 here, which is a major level. So we just expected to see resistance here. We know that there's old consolidations here as well. We know there's a lot of open interest in the options market sitting here as well. So we're going to see that resistance come in, and which we are. And if we find this is support, we're going to go long from that point. Don't worry about that. We're not going to miss a trend because we're stuck or attached to one side of the situation. But the 3,000 is a line in the sand. And if the market was going to continue to move up through here, then we would need to look at this this here as a wave 1 over here and a wave 2 here. Blue, and then just keep climbing up into a trend. But we're not there yet with that, so we don't need to look at that. But we would need a solid support on that 3,000 there for a move to the upside. And we can draw that out here of what type of support we're going to get in this area. This top here, we need to check that as well. I was looking for from wave 4 here to wave 5 here. We're looking for that target area here on that high here. So I've just got that by taking the last fourth wave here and bringing that onto here and just looking for the 61.8% to the top up there. That's how that was achieved. There's lots of ratios within the structures we all know that. So we just need to be a little bit mindful, and more important to cover the 5 waves. There's also a possibility that there can be another little high in here too, so we'll be looking at that today as well. But one of the things that I wanted to point out is that if we can see a clear sort of high here, nice sort of high that we can work with here, then we'll be looking at that high here for a long trade at that point. Now, we may get sort of sucked in. We could go long on this high here, for example. So we'll need to manage that there because we may get trapped. This is a very small high above the level. No doubt it is. But there's also this high over here. So we want to see that reflect back over here as well. Above the 3,000 here, which is the major level, then we've got minor levels here of 100, 200, and 300. 300. So we'll be using those between the 100 and the 3,000 here. We've got the sub levels, and once again we've got 1, 2, 3, 5 and 8 here, which we can also bring in as 80. We can also bring in group 2 in that little area there. So we would need to see a nice pattern to the upside for that. So as I mentioned, this is the kind of thing we'll be looking at here. So this arrival here, even though we've just made a little new high above that, I would still just consider this the arrival here. So I would still need to see this other leg here to give us a nice clear, clean high above here, and then that drop back down and then get back up there. You know, that's the process, and that's what we're looking for. Sometimes it doesn't need to come down below the level here as well. So that's the variation on this pattern, which is this pattern here, and we can move up. We won't be missing anything because we'll be taking these highs here in that instance. Also too, on the bearish side of things, we can also look to reverse that pattern, and we can look at it on the bear side like this. So we would need to see a nice clean breach to the downside, a move to the upside, and then we can start, once we've got that final test, we can start looking at moving in on this low, this low, and this low here. There's variation on that as well, where it doesn't pull back above the level here. We still don't miss anything. We can take this low here or this one here. So we haven't seen this retest here in the S&P 500 just yet for that. As you can see, it's just popped down through here. So with all that said, we'll go in here now and look at this particular leg here, and we'll also take a look at the NASDAQ as well, because it's moved down further than the S&P. So with that in mind, we'll go to the pick it up at wave 4 there on the hourly chart. That's not doing as much good either. So look, just one thing here, you know, we counted roughly up here for 5 waves. We'll look for that top here for this, but this is the other count that I have here on the 15-minute chart here. So from this blue wave 4 here, we've got wave 1 and 2, and 1 and 2 and 3 and 4 and 5 for 1 and 2 here, 1, 2, 3, 4, 4 and 5 in here for the third, the fourth, and then up for the fifth here. So it's possible that we've only got the fourth wave down here just yet. So that would be from this low here roughly to this one here roughly, and that would be the 38.2% retracement level. I can see that we've got this strong move down through here. So it's possible that some of this is wave 1 and 2 and 3 here and 4 here. So we may see another little move down here to get that 5 waves there. We'll need to double check that. And then up. But what happens here though is that, you know, we can see the retest occurring here now, right? And that's what we're looking for, because it opens up this point here in terms of the short trade here on this. So I'll just pop that in here. But I'm just going to put half a position here, right? And I'll explain that a little bit later, because let's just clean this up here for a second. Well, I'll just, anyway, there's a trigger there. Now, this trigger could get us into trouble, because first of all, you know, we're just getting a reaction. We've just arrived at the 3,000 here. This hasn't really been rejected at all, the 3,000 here as such. The market's going to vibrate here for a while. It will, you know, it will just stick to that for a while. So, but anyway, we need to take the setups, but I wouldn't really, you know, I would call a rejection of the 3,000 if the lower end here, group 2, became the resistance here. And within group 2, the 72 here, the 972, if that becomes the retested resistance, we can short at that point there. Above this level here, we've got 10, which is, well, 1. Get it there somewhere, and 20, number 2 here, let's keep it simple, and number 3 here. Now number 3 is really important, and then we've got also, we'll just put in 5 here while we're here. So 1, 2, 3, 5, the Fibonacci numbers as a price ratio. We know that we know that if we get a nice tested support on top of this level here, number 3 here, the top of group 1 here, then we're going to be pushing up to 5 at that point. And if we get support on this level here with the classic trading levels pattern, well, then we'll push up to 8 at that point, up into the group 2 at that point. So when we haven't got that yet, so basically what the market is doing at this stage is this is what it's working with here. Okay, we've got group 1 above, group 2 below. If group 1 becomes support, we go long. If group 2 here goes as resistance, we go short at that point. There will also be from this low here to this high here. I'm just checking the downside here. There will also be resistance here that you'll need to be mindful of in this space here if the market comes down. So knowing that is important as such. So what we also need to do now, if we do go long as well, first of all, you wouldn't go long below the level. You would need to be on support of 3,000, a nice little classic trading levels pattern sitting on 3,000 as support. But if we were, we'd just be looking for 5 waves to the upside here. So that would be, it would trade above, trading above the 30 here is not support. It's just part of the process, and then we can come down from that. So I don't know if that's the case, or we just come straight down from here and start building down from this point here. This little move in here is kind of interesting as well, so we'll need to look at that. So I'm going to go to the tick chart, but the tick chart's got a different count on it, but we're not kind of worried about the count on the tick chart just yet. Okay, so don't worry about it. We just want to look at get a bit more data in. So I have counted up through here. We'll look at it. Okay, but I know that you don't like too many counts. That sort of, everybody wants just to give that one count with a lot of confidence, but I just can't do that all the time. So wave 1 here and 2 here, and then wave 1 and 2 and 1 and 2 and 1 and 2 and 1 and 2 and 3 and 4 and 5 for the third, the fourth. This is how I counted it. So I feel that, you know, looking at all of this, we're still at this wave 4, not the green one, but I used the green one here just to make it a little bit simple. So in this particular instance here, excuse the mess, but 4, 5 for the third, the fourth, and then the fifth to the upside here. So more to come here in that regard. Let's clean these up here. They don't need to be visual here as such, but it's just the way that I work with this particular platform. So, but what I wanted to point out here is in this little area through here. I just wanted to go in and have a little look at that. I know it's just you know, cutting things fine here. So, you know, when you first look at this move down through here, it looks like it's in 3 waves, doesn't it? So that means that the whole thing is corrective, right? So we could look at it as an A wave, a B wave, and a C wave. But it could also be bearish, and this is what I want to dive in here and have a little bit of a look at this. So I'll just open it up a little bit here, just so I can see here that we've got 1 and 2 and 3 and 4 and 5. So we've got 5 waves here. We've got a rally coming back up, you know, to the wave 2 or 61.8%, yada, yada, yada. And then we've got 1 and 2 and 3 and 4 and 5 here for the third wave. So then we've got the fourth wave here. So the extension's in wave 1 here, and then we've got wave 3 here, and then we've got wave 4, and then we've got wave 5 here. But wave 3 is not the shortest. Wave 5 is. There's a slight problem with that, with wave 4 overlapping wave 1, but hey, that's not the end of the world. But what I am saying is that we could count that down as wave 1 here, come back for ABC for wave 2 here, and then look at this as 1, 2, 3, 4, 5 here. So we can have wave 1 here, and then wave 2 here, then wave 1 here, then wave 2 here. This can also be wave 1 of the next degree as well. So we could be in the third of the third of the third to the downside. That's why we need to take that trade to the downside if this low here gets breached. So it can be counted as 1 and 2, 1 and 2, and 1 and 2 here, or so on, because that's probably risen a little bit high here. So here we've got 1, 2, 3, 4, 5, 1, probably 1 and 2. Just got to pull this apart. I should do it on a 20 tick So got 1 and 2, 1 and 2, and 3, 4, 5. So all of that 3, 4, 5. So all of this here, that's 1 and 2 and 3 and 4 and 5 here for 1 and 2 here. That's 1 and 2 and 3 and 4 and 5. Lost the plot. Let me just go back over that. 1, 2, 3, 4. I got it. Sorry, 1 and 2 here, and then this is 1, 2, 3, 4, and 5. No, it still doesn't matter, does it? I have to pull it apart on a tick chart. But let me just check this. I'm just shooting the breeze here. So we're above the 38.2% retracement level here. Not that it doesn't matter, because markets love to get to the next large number here. But if we get a classic trading levels pattern on here, we can pretty much go long. The problem will be in that if all of this is wave 1 down here, which I'd need to check, then the resistance is here. So this will be your problem area if you go long, if you went long on top of 3,000. So just be mindful of that. But the good point about that is that we can break from wave. This is level 1 here, so we sub 1 here. So we can look at from 3,000 to 10 here. We can break that down again into 1, 2, 3, 4, 5, 5 being the second strongest number, and then 8 here as well. So you could actually add to the position or go long instead of going long here. We'll go long here, but also if you get the right pattern is the arrival, the reaction, the first high above the level, some type of ABC correction, and then up from that point, and you go long at that point. But also look to do that here as well, to build in on top of this leg here for this, on top of 5, on top of 10, and then up to 20 and exit at 30 if that was going to be the case. So all of that, what I wanted to have a look at with the NASDAQ, which is a little bit different, which is more bearish, is over here. So the NASDAQ has pulled back down well deep into the 62% retracement level. 62 just means 61.8%. So put that here roughly. So yes, it's it's settled right into this particular point here. But at the same time here, this looks kind of impulsive down here rather than corrective here. So the only way that this could work would be this being up for wave 1 and back for wave 2 and then continuing to the upside. So we wouldn't really be able to go bullish on this here unless we're above the 61.8% in this instance here. So that would be in that zone. So you want a really nice support on top of number 5 here. 5 is a fantastic number to work with. So it need nice support on that to go long at that point. The other side here though is I'm just looking at the count here for this. I need to pull it apart on a tick chart, but where it becomes, and that doesn't even look like it's finished here, this little bit here, I have to do a bit of work in that. But even if it does come down here, one more move down through here, what we'd be looking for would be somewhere along the line, we'll be looking for an ABC correction back up. And that ABC correction back up here, if it's going to turn bearish, we take the 2 lows from that point, and then you can go short on that breach through there. This looks, it's not finished here. I don't want to burn up too much more time. But yeah, so we can look to, where are we here with this? I might have another look at this when I do the stocks, when I do the NASDAQ stocks. So what are we looking at today with the US stocks? I think Google we're looking at, oh no, Facebook. Oh, we did that yesterday. I'll double check on everything. But this is looking like it can, set up for that downward movement here. We just need to count those 5 waves in here, but I don't want to do that just yet. Alrighty, sorry for taking so long. Thanks for tuning in. Cheers.